Good morning, good afternoon, and good evening to everybody. And firstly, a very warm welcome to today's webinar. As you just heard, the topic is tokenization and central bank digital currency, CBDC, the impact on the bond markets. And it's clearly of immense interest. We've had over 600 register to join us this morning from all over the world. So a very warm welcome and thanks in advance to the three speakers. It's my privilege just to say a couple of words by way of introduction. And as we know, FinTech is an overarching theme. It cuts across all of our members' activities in our four core areas of the primary, secondary, repo and collateral markets, and of course, sustainability and the sustainable bond markets. And we've been increasingly involved in the FinTech agenda for a number of years now. And our strategy comprises three main components. Firstly, providing resources to members to familiarize them more with the various strands of FinTech which are or will be impacting their day-to-day business. And our mapping directories in all of our core areas are a very good example of this, as is today's event. Secondly, bringing together market participants with a view to promoting common standards and best practice. And thirdly, an increasing level of engagement with regulators as they also grapple both with using FinTech and of course with regulating the new technology. And we're very grateful for the guidance of the ICMA FinTech Advisory Committee, chaired by Armin Peter from UBS, and this helps set our strategic priorities. And currently, these involve a focus on two main things. Firstly, promoting common data standards to enable process automation along the securities lifecycle. And secondly, tokenization of bonds and digital currency, understanding the implications for market practice and what are the adoption challenges. And it's this second priority we're delighted to be hosting this event with you today. And you may remember that in our last FinTech forum, we heard about a digital euro from the ECB. And today we're going to explore in more detail wholesale, CBDC, and tokenization with our three speakers. And there's been a great deal of activity in this area over the last year. We've all seen the many announcements and reports from central banks and international organizations on their involvement in exploring and experimenting with CBDC. Of course, back in June, we saw the Monetary Authority of Singapore's final report on Project Ubin and the announcement in December on the success of Project Helvetia in Switzerland. While in the market, we're seeing the development of new digital ecosystems like that of SIX Digital Exchange, alongside many other bond and repo tokenization initiatives. And just as an aside, you can find many of these on our new FinTech applications webpage. So I think we can all agree there are many questions to pose on the development and the impact of CBDCs and tokenization on bond and repo markets. But one thing is absolutely certain, there is no doubt that they will fundamentally change the capital markets that we work in. So with that, I'd like to move into the webinar proper. And as Leanne mentioned in the introduction, I'd like you all to raise your questions through the Zoom Q&A function. And you find that right at the very bottom of your screen in the middle there. So please don't be shy. Do put through your questions as we go through. The way that this is going to operate, we have three 10-minute presentations from the three speakers, Tim Grant, Morton Beckh, and Wee Ki To. And then we're going to have a time for Q&A after that. But before we start, we have a question for you. We have a quick polling question. Leanne, can we see the results, please? Well, that's interesting, isn't it? Smart contract capabilities were the main answer. 38% of you thought there was a real opportunity in that. Then disintermediation, atomic or instance, were approximately equal second. Third, documentation efficiencies, which is a bit surprising given that smart contract capabilities was top, but there we go. And then other 4%. Most people probably wondering what other actually means. Right, I think with that, what I'd like to do is introduce our first speaker, and I'm delighted to welcome Tim Grant. Tim is the head of business at the Swiss Digital Exchange. And as you may know, the Swiss Digital Exchange is looking to become the world's first fully regulated institutional digital asset exchange. Prior to his current role, Tim has a long and distinguished career in the fintech world. He was CEO of the R3 Lab and Research Center. He was a managing director at UBS O'Connor, where he was head of quantitative research and head of technology. And prior to that, a managing director at UBS. So Tim, very interested to hear your introductory comments, and we're looking forward to questions on Tim's presentation later. Over to you, Tim.
Wonderful. Thank you, Martin. Really appreciate it. Great opportunity to be here, and especially with Morton and Wiki, both of whom I've had the pleasure of working with on Central Bank Digital Currency projects. So what I want to do today is just take a few minutes to go through the user end of the story. As Martin rightly pointed out, we're building an exchange and a CSD in Switzerland, and ultimately, how does this all relate to the topic du jour? Well, we are working, as you know, with the Swiss National Bank and the Bank for International Assessments on Project Helvetia, and Morton will give much more detail about specifically what we've done there. But it's all an enabler. It's actually trying to get to something else. That it's a facilitator. This isn't the end in itself. It's a means to an end. And where I'm going to end in this brief session is in the bond markets. So very relevant to our viewership today. So I'm going to jump to the next slide and take you through a brief history and a very quick history of SDX, and ultimately get to kind of the sharp end of the stick, which is what happens when we go live, and how will we use central bank digital currency. So on the next slide, just to let everybody know the history, SDX has been around actually now for nearly 3 years. It was actually July 2018 that there was an announcement made by Jos Dijsselhoff, our CEO, and Tom Zeeb, who runs Securities and Exchange, or now runs all the exchanges at SIX. And this was a pretty significant announcement. I remember it myself being very material. Everybody was quite surprised that SIX was the entity to come out boldly with this kind of statement. But also, I think everybody realized that this was yet another demonstration of evolution in the marketplace, and a crucial piece of infrastructure that we need in order for capital markets to be able to move from the 20th century paradigm, which is what we do at SIX, which I'll talk about in a second, and the 21st century paradigm. So on the next slide, I do want to talk about that. What do we do today? So at the bottom, many of you may know also that we bought the BME last year. So SIX is now operating in both Switzerland and Spain. And we have the Swiss Stock Exchange and the Spanish stock exchanges. We have XClear and in Switzerland and IBEClear in terms of clearing. We have SIX SIS and the Spanish CSD as well. And crucially for this discussion, we operate the payment rails on behalf of the Swiss National Bank. That's SIC. Now, the whole idea of SDX is to reimagine and think about how to get all of those different pieces of that value chain brought through into the 21st century paradigm. That's the whole point of SDX. Very exciting and a very bold ambition, but no less than what we're looking to achieve. So that gives you a sense of the mapping of the traditional to the future state. Now let's go to the next slide and ultimately just make a really clear statement about why we're doing this. Why would we go and build a completely standalone stack of exchange and CSD for regulated digital assets? Because we have a global story, and that will come through as we talk in the next few slides. It's all about global liquidity. We believe in breaking down silos. So we have already started work, as many of you will have seen, with our partner SBI in Japan. We're building an exchange in Singapore, and that's going well so far. And the whole point is that we want to connect our Zurich location with Singapore. We're also working with SBI on their Japanese location. And you should expect to see more locations associated, accruing to a bigger story. Can we connect these multiple locations? Now, going to the next slide, just to kind of make the point on how we're doing this. What I've described already is a very grand ambition. global liquidity, multiple locations, digital assets of all types, central bank digital currency from multiple issuers. That's a grand ambition. That's going to take years, and the impact we're looking to generate is significant. However, we do recognize we need to do this in small steps, and that's really important to have that long horizon, short delivery of results kind of perspective on things. And that's exactly how we look at it now at SDX. Grand ambition, big impact, small steps. So moving on, what I'd like to do now is just kind of take you through our vision. What is that long-term vision? So I'm going to read this actually because it's worth saying out loud. There's very carefully selected words on this page. You know, what we're looking to do is a trusted, global, integrated, institutional liquidity network, an ecosystem. So there's a mouthful there, but every word counts in that first sentence. That's the goal. And what we're trying to deliver is capabilities for the issuance, trading and settlement, transfer and custody of digital assets. So the whole life cycle from end to end, and in fact, as you'll see from the next slide, some more elements as well. In both public and private markets, as well as regulated digital securities and crypto assets. So we are looking at what I call regulated digital securities. Some people call them security tokens. And as you'll see, we'll talk in a moment about debt being a part of that, but we're looking at equity, we're looking at structured products, we're looking at fund products, but we're also now looking at crypto assets, what I call the convergence trade, as all of this comes together. Now, finally, not to be forgotten, underpinned by a data collection and distribution layer and advanced analytics capabilities. If we're going to build this kind of network, it does afford us the opportunity to rethink how we distribute, aggregate, and catalog and allow for ownership and control of data. That's very much a part of what we're looking to build as well. So a very big vision. But let's move on to the next slide and talk about the ecosystem. Now, there's a big play here, and the purple part in top that's what we're building today in Zurich, the exchange in the CSD, connecting to local banks and international banks, and in some manner leveraging the central bank digital currency and other types of tokenized money, which I'll come back to a little bit later. But that alone doesn't do it. We've got to go from there to what we're calling the network as a service area. We fundamentally believe, and it's interesting, the poll we just did, a lot of you said smart contracts is going to be really powerful piece of this evolution. You're absolutely right. We see that too. And ultimately, there's a lot of gray area between regulated and unregulated infrastructure. That divide is going to get much less clear. And all of these networks are going to connect together. And the smart contract element is what's going to allow us to do automated capabilities across different networks. So that's the blue part, unregulated infrastructure that we think will be built on similar infrastructure to the regulated infrastructure, and it will provide great resilience and interoperability. Now, those networks have got to, and you see the top and the bottom there, you've got other DLTs, other trading venues, pre-issuance providers, data analytics. That's all inclusive when we think about the ecosystem. And then finally, and possibly the most importantly over time, the bottom in the gray is the non-bankable asset representation. So everything that we talk about in terms of art, in terms of real estate assets, insurance assets that traditionally haven't been traded. The whole point is if we're able to create all of the above, we're able now to get to a place where we can have those assets traded. Again, could be public markets, could be private markets, but we want to facilitate that infrastructure. So that's a sense of where we're getting to. So we go to the next slide. I will want to talk very briefly, just got one slide on strategic considerations. So I'm not going to go deep into our business model and a lot of the work we've done over the last 3 years, but just this one slide now and the next slide gives you a sense of how we think about moving from the traditional 20th century paradigm. And let's face it, most exchanges and CSDs that exist were all built in the 20th century, some going back to the 60s and 70s. How do we get to the 2020s paradigm? So that's going to mean new processing paradigms. That's for sure. And we're already seeing that in what we're building in Zurich and Singapore, new ways of processing various elements of the value chain. New assets I mentioned, so crypto assets are new kinds of private market assets that were making traditionally opaque assets more accessible. New markets and new marketplaces, so not just new geographies, but new ways of trading. This kind of infrastructure allows you to move from certain limitations of building market structure and market microstructure to new ways of doing that. So that's what we mean by new markets. And we're starting to already see in our work new products and services. So a simple example would be, until now, trading and settlement have been handled separately. We've built in SDX the opportunity to create integrated trading and settlement. That's a new service. That's a new way of approaching this. And then finally, operational leverage. The whole point is we build this stuff once, we use it multiple times around the world. So that gives you a sense of how we think strategically and how significant this move from old to new is going to be. So now let's get into, on the next slide, the kind of update. Where are we now? I've given you lots of high level. I've given you lots of kind of strategic sense of where we are. Now on the next slide, I'm going to kind of talk to where we are in our history. So the first 2 years, 2018 and 2019, very focused on building a foundation, building an exchange and a CSD, working with FINMA, the regulator, towards our licenses. No mean feat. And to be clear, the exchange and CSD licenses, although they are specific to digital assets and regulated digital securities, they're not in any way limited. They're the same class of license that we use for the Swiss Stock Exchange today, and the CSD in Switzerland. So therefore the barrier is high, and it takes time to build that level of capability. It's got to be extremely robust. So that's what we spent the last 2 years doing. 2020 was a big pivotal year for us. I started a year ago, and really needed to prepare SDX for the go live. And so we did a lot of client validation last year, technical feasibility, working with FINMA, started to drop to FINMA capabilities. And now we get into 2021. So I'm delighted to say that over the next couple of days, it's actually this week, we will finally have delivered everything we need to deliver to FINMA in order to get our licenses. So we're going to be working with FINMA in partnership over the next couple of months and hoping to see our licenses come by the end of Q2. Now that's a big milestone for us. That's when we can get into really doing real transactions and ultimately starting to use tokenized money. And that's what this is all about. So from now on, we're going to be thinking very commercially. And so on the next slide, I'm not going to read this slide, but I mentioned it takes quite a long time to build this stuff. Well, that's because we've had to build out all these boxes. Our trading system is built on the NASDAQ matching engine, just like this traditional stock exchange with a central limit order book, but we're also getting into RFQ and other dark pool type models as well. Market surveillance and data publication needs to be consistent with what the banks already use. We're not reinventing the wheel when we don't need to. And then the CSD is the really new part. The CSD is built on R3's core to blockchain platform. This is what will allow us to create digital assets natively on a blockchain and then trade them in the secondary market. So listing, trading, settlement of these digital assets and custody all handled in one integrated system, which is really never ever been done before. And of course the ability to use DVP, and this is where tokenized Swiss francs come in, and this has all been crucial and central to our design from the beginning. So on the next slide, now we get to talk about, so what does that all get us to? And so with respect to the bond markets, this is just one representation of what we're going to do. We are doing other assets, but for the purposes of this discussion, I'm just going to talk about digital bonds. So what we're going to do, I'm very excited to say, is as soon as we go live, we will be doing a large Swiss franc denominated digital asset corporate bond right out of the gate. It's going to be 100 million plus in size. It's therefore going to be a part of the Swiss Bond Index, and it's going to have, we have issuers that we're talking to. We're going to be, this one particular issue we'll start with, but we have multiple issuers already working with us for the back half of 2021 to actually do these digital issuances. Then we have the ability to do a dual tranche listing, where we can have a traditional tranche in the traditional manner. We can have a digital tranche in the digital manner. They will both have the same ISIN. And so this is something that's super new and is, again, never been done before, end to end. We've seen sort of pockets of one bond issued on one platform where it doesn't have a liquidity or anything like that. We're actually going to build that liquidity. And we've got large banks already onboarding with us. The whole thing will go through our infrastructure. We're working with the custody banks and the buy side already. So digital bonds is where we're going to get started. And I think that surprised some people because I think everybody recognizes that we need a lot of change within the bond markets in order to deliver all the sort of efficiencies that we think we will get. And that's true, but you got to start somewhere. And we're going to be the first to kind of fire the starting gun on this. So just on the last slide, this kind of takes us back home to the central bank digital currency element. Now, we are delighted to be working with the BIS and the SNB on this. We're now coming into phase 2. More details of phase 2 will become public relatively soon. Phase 1 we announced in December. Morton's going to talk more about what we did. This is super important. We are already using production level technology. This is not testing. This is not POCs in the classic sense. This is production grade technology that we are using for this work that we're doing. And now we're going to involve broadening and deepening cross-border activity, multiple banks, both domestic and foreign, using this central bank digital currency. Now, we anticipate that the Swiss National Bank will eventually make wholesale CBDC available through a board decision. Until then, we can use other forms of tokenized money, and we will. But the whole point is we're going to be going live with the ability to use this CBDC or tokenized money right out of the gate. So I'm going to leave it there. Hopefully that was a quick whirlwind and useful kind of tour of everything that they were doing, but it brings it back to where the topic of the day, which is CBDC. And I'll pass back to Martin.
Thanks very much indeed, Tim. Very, very exciting developments there, and very good luck getting the rest of your licenses in place by the end of Q2. And very much looking forward to seeing this first digital bond come through. And it's actually a very good segue into our next speaker. Our next speaker is Morton Beckh. He is the head of the BIS Innovation Hub, the Swiss Center. And as we just heard from Tim, been working very much with the BIS Innovation Hub on central bank digital currency. Now, Morton has, he joined the BIS in mid-2011. And before that, he was the head of the CPMI Secretariat, and has also worked with the Federal Reserve Bank of New York, the Danish Central Bank. So bags of experience, and now moved into the BIS Innovation Hub Swiss Center. So with that, Morton, very interested to hear more about your work on central bank digital currency and how the BIS Innovation Hub really works. Over to you.
Thank you very much. It's a great pleasure to participate in this great event. Yeah, I'll be talking quickly about Project Helvetia, settling tokenized assets in central bank money. But before that, if you can go to the next slide, I just want to say a few words about the BIS Innovation Hub. Tim mentioned the short history of SDX. We have an even shorter history. We've only been up and running for about a year. And so currently we have 3 centers, one in Switzerland, and then we have one in Hong Kong and one in Singapore as well. But as any good startup, we are scaling up fast. So within a year, you can expect to see new centers popping up in Toronto, London, Stockholm, and then a Eurosystem center in both with locations both in Frankfurt and Paris. And then we also have a strategic partnership with the Federal Reserve out of the Federal Reserve Bank of New York. Next slide, please. So what is the Innovation Hub all about? Well, we have three things in our mandate. One is to be a focal point for a network of central bank experts in innovation. And then we're supposed to scout new technologies on behalf of central banks. But what is really important is the projects that we run on behalf of central banks so they can learn about new technologies. And we do that as POCs or prototypes. And the Helvetia project is one example of such a project where we try and deliver public goods for central banks. Next slide. So yeah, this is just a little bit of Swiss branding. So this is the Swiss Center. So we believe that we can do central bank innovation Swiss made. Next slide, please. And so Project Helvetia, if you don't understand what I'm saying, then there's help. We, together with our partners at the SDX and SIX and the Swiss National Bank, there's a report available on the BIS website. And there's actually some very, very good videos that I encourage you all to watch if you are interested in learning more. We go to the next slide. So as Tim mentioned, I think I think his grand ambition has this potential of actually being a paradigm shift in how we think about the architecture of the financial system. So today, the financial market infrastructures are very much just the electronification of the old paper-based processes. But this distributed ledger technology does hold the promise to actually completely rewrite the book on how to trade, clear, and settle securities. Whether that will happen, we'll still have to see. But it's very important that it does have this potential to open up many possibilities, and the participants has already noted that smart contracts and so on and so forth are some of the many opportunities. But I think it's important that central banks, regardless of what happens, really wants to continue to offer settlement in central bank money for systemically important FMIs. We do believe that the central bank money as the lowest credit risk and liquidity risk is the best asset to settle for systemically important financial market infrastructures. So next slide. And so here is just a way of looking at it, right? So the cash leg of anything and the asset leg, so it's a 2x2 matrix, and there's two choices basically in how you settle the cash leg. You can either use today's technology, which is reserve balances, or you could use a wholesale CBDC. And then on the asset leg, we have traditional assets stored in a more traditional CSD, and then we have the opportunity now, which we've been discussing, of tokenizing assets. And so what Project Helvetia looked at was these two different POCs. One where the S&P on the SDX test platform issued a wholesale CBDC, and POC 2 where we actually linked it back to the existing RTGS system, which Tim mentioned, called 6. So if we go to the next slide. So this is just the same thing. We have the two POCs, one where we settle the cash leg in using a wholesale CBDC, and then we have POC 2 where there was a link between the existing RTGS system and this new tokenized asset platform. Next slide. And so if we look a little bit under the hood of Project Helvetia, just a couple of things. I think one of the strengths of Project Helvetia was that it was really, really close to a production environment, both on the SDX platform. We were using their test system and also the test system of the Swiss RTGS system. So this was really close to production environment. And so the issue and transfer and redemption was all possible and feasible under the existing Swiss civil law framework. So that's also something that has not always been studied in great details in some of these central bank experiments. And then to make things a little harder for ourselves, we actually decided that we would not make any changes to the existing Swiss RTGS system. So the proof of concept had to respect the current technology that was available. And then another point that I think is that the wholesale CBDC could actually exist overnight. And on the next slide, I will talk a bit more about that. This might be something that only I find interesting, and I'm a bit of a monetary economics nut. But what is really interesting is that in the setup that we analyze, wholesale central bank digital currency would actually be a separate component of base money, or what economists refer to as M0. So it would actually appear on the balance sheet of the S&P. So just like cash and reserve balances today, wholesale CBDC would be a separate item on the balance sheet. I can talk for hours about that, but let's not do that. But let's try and move to the next slide. But there were some really key insights around who gets access to this and how do you actually do remuneration and other key points. Coming back to the key findings of our study, I think what was very nice for the S&P and also the BIS and all the central banks was that we actually found out that both of the POCs were functionally feasible. So that gives the central bank options, we like to say, and that also that both POCs were actually legally robust. So that's something that central banks, of course, would be very much interested in. But also that the options have different implication, and to put it concise, it's really that we believe that the wholesale CBDC in the longer term definitely provides more functionality, and especially if it has to be embedded into or used by smart contracts that runs on these tokenized platforms. But on the other hand, clearly the RTGS link is much simpler for a central bank to implement, and in particular because it raises a lot fewer policy questions. So, for example, for the RTGS system, the access policy of the central bank, who gets access to central bank money or central bank reserves, is already predetermined and not something that you would have to consider separately, as you might have to do on a tokenized asset platform, where there actually might be a different set of participants. So which participants are you actually providing central bank money to on a tokenized platform? And if I go to the next slide, yeah, this is just a little bit of an aside, but remember my 2x2 matrix where you are actually settling tokenized assets versus central bank's reserves. So that, and the point I wanted to make here was just that, again, this is a case where the central bank actually has options. So the way that it was implemented in our POC, the RTGS system and the SDX system was actually linked by ISO 20022 messages. So it's kind of like standard payments and or securities messages floating back and forth between the two platforms. But last week, the Bundesbank also released a report on something they call trigger chain, and where they actually used another blockchain to be the communication layer between the tokenization platform that they built in their test environment and the Target 2, so the Euro system, RTGS system. So again, there's plenty of different opportunities to do some of these things. So I just wanted to highlight that, the use case of these two, POC2 in our case, and the trigger chain is really the same, but the technology to achieve that is different. So go to the next slide. Yeah, so on the impact on the bond market, maybe this slide is a bit more too dramatic. So is wholesale CBDC, is that going to be a wrecking ball for the bond market? I think not. I think in terms of the economic functionality and the importance of the bond markets is obviously not going to change because of wholesale CBDC. But of course, the whole tokenization of both the asset and the central bank digital currency is going to change the mechanics. And one of the interesting question that I think is really around the market structure and the liquidity requirement in an atomic instant form of settlement. It's going to be different, how you're going to be a dealer, and also the liquidity requirements might be much larger. So we actually might want to think about how do we bring bank netting in some sense in these environments. And finally, I also think there's something to be said around potentially wholesale CBDC being a substitute for other forms of short-term, high-quality liquid assets, and that could definitely occur. But I don't think in the longer end there will be any impact. So that's just some very preliminary thought on the impact on the bond market. And then I believe my final slide is just, yes, as Tim also mentioned, we're continuing the Helvetia project, and in the phase 2, we are going a bit deeper, looking more into the end-to-end connectivity, and we're also looking at how would you do cross-border settlement in such a setup. So let me end it there, and thank you very much. Bye.
Thanks very much indeed, Morton. Very thought-provoking. I'm sure there'll be questions on that, and interesting to see how closely you're working with the 6 digital exchange. We're going to move to Singapore now, and we've got our third speaker, and our third speaker is Wee Ki To, and he is the specialist leader for distributed ledger at the Monetary Authority of Singapore. So, and that's in the FinTech and Innovation group of the MAS. And interestingly for us, he also leads this project UBIN, which we've already heard a little bit about, which is a collaborative industry project exploring the use of DLT for clearing and settlement of payments and securities. So with that, Wiki, very interested to hear what you have to say before moving on to the Q&A.
Thanks, Martin. Yeah, so I'm Wiki, the specialist leader for distributed ledger technology in the Monetary Authority of Singapore. I've been working on Project Ubin over the past couple of years. Focusing is really a lot on the use of blockchain and distributed ledger technology for clearing and settlement for both payments and other assets. So if we should just move to the next slide. Yeah, so Project Ubin is really an industry collaboration. So when we first started the project, this was over 5 years ago. Tim was involved with us from the very early days as well. So he probably has a good understanding of this as well. So when we first started, that was 5 years ago, understanding of blockchain technology back then was very poor. We saw that there were a lot of within the industry, there were just a lot of practitioners who were talking about blockchain technology, but we didn't really see much actual usage of it. So we thought that, if everyone is just trying to be a fast follower, that doesn't help with innovation. So what we did was really bring the industry together on this industry collaboration for two purposes. One is really to better understand the technology and how it can be applied. So for that reason, we chose a use case that, that we could bring the industry together where the benefits accrue to the industry rather than to individual parties. So that's how we managed to get everyone really to come together, experiment together, and share their learnings with each other. The second part is really looking at eventual goal of developing a much more efficient alternative to today's system, using distributed ledger technology, using central bank issued digital money. Yeah, next slide. So we have actually went through quite 5 phases over the last 5 years, and we have actually published 6 reports. So the intention of doing the project, as I mentioned earlier, was really to just bring the industry together to generate new knowledge and to really share those learnings. So when we started phase 1, that was a very basic, rudimentary digital Singapore dollar. We wanted to prove that we could actually tokenize the Singapore dollars and connect between this DLT payment system with our existing RTGS systems for pledging and redemption. Once that was done, we saw that, hey, actually the technology was quite interesting. We do see some set of benefits. Back then, the main benefits we saw was really in terms of resiliency. Subsequently, we also got really interested in the smart contracts aspects of it. I'll share about that a bit more later. So in phase 2, we decided, hey, technology looks interesting. Let's see whether we can build a basic RTGS system on it, meaning that the basic functionalities that is required of an RTGS system, we're able to build and test that on a DLT platform. So we actually did testing on 3 different DLT platforms, Coda, Hyperledger Fabric, and Quorum. So through that, we also understand some of the technical challenges and limitations related to each of the platforms, and also look at how we can find solution to solving them. One of the really interesting part of that particular phase was developing a decentralized multilateral netting models. So this was really about liquidity savings mechanisms. How do we do it in a decentralized system while still preserving privacy? Because that in a more traditional system, the RTGS operator has sight of all pending transactions. Because of that, it's able to do the netting algorithms easily. So over here, what we did was really developing new mechanisms, new algorithms for decentralized multilateral netting. So from phase 1 and phase 2, right, what we did was really focusing on the payments. Then what hit us was that, hey, payments, it doesn't exist in itself. Payments doesn't exist in isolation. Payments is usually done in exchange for something else. So it could be for security settlement, it could be for trade. So that's when we started looking at what if we are able to interface, integrate with another blockchain-based system and enable settlement to take place on this Ubin payments network. So we started with the DVP phase which was phase 3, that was done together with the Singapore Exchange. So what we did was build different platforms for security settlement, test it out with the Ubin payments platform, and show that it is possible for connectivity between this DLT platform and allowing for atomic DVP settlement. So after that, we also started looking at cross-border payments. We started with first a review of what are some of the problems in the cross-border payment space. So that was totally technology agnostic. That was a collaboration with the Bank of Canada and the Bank of England. Subsequently, we actually looked at linking up of two blockchain-based payments platforms. So we actually connected Jasper in Canada and Ubin in Singapore and showed that cross-border PVP payments can work. And then that brought us to phase 5. Phase 5 was when we did two big things actually. One was proving that it is possible to do multi-currency settlement on a common platform. So over here we had different central banks, different commercial banks issuing or distributing different currencies. Essentially that allowed for multi-currency settlement on a common platform. We also tested out connectivity and integration with different commercial blockchain applications just to better understand what's the commercial value of having blockchain-based payment systems, how it can be used by the financial industry. Next slide. So I'll just zoom in over here to phase 3 because I think that work on security settlement is probably what is most interesting to ICMA members. So over here, okay, I won't go into details. A lot of them actually team has went through already. The benefits we see are largely very similar. You know, it's really about faster, cheaper, and safer security settlement and payment settlement. So the ability to do DVP, atomic DVP, that actually helps with the safety aspect. I want to just point directly to two big things over here. First is number 2 over here, where we talk about using smart contracts to apply obligations and rights consistently and coherently. You guys also voted right at the start that you see smart contracts as one of the big innovation that is really useful for this space. This is really what we saw as well, because when we talk about faster, cheaper, safer settlement, we could actually do that with existing technology. We would be able to do the same if we are able to bring different parties onto common platforms. But one of the big innovations I see in DLT is really the use of smart contracts. So we are seeing a lot of different possibilities for that. So some of the other use cases that came up was about shareholders voting. You know, if you have a share registry that can uniquely identify all the different shareholders, could you then use that to do shareholders voting in a secure and seamless manner? That's one of the big things. And then what about dividends payments? You know, currently securities could be recorded in multiple levels of ledgers. What if, you know, on a common settlement platform, on a common ledger, if you have details of all the shareholders, could you then, you know, do dividends calculation and then have it paid out to the shareholders seamlessly? Interest calculation is another interesting area. So for example, if there's interest rate swaps and you are able to put the interest rates securely, those data statistics securely into the smart contract, could you then automatically calculate what's the payment to be made to the right counterparty periodically? So that could cut down on a lot of the operational errors. But if you start looking at all of these different use cases, you start realizing that ultimately most of these use cases touches payments. We talk about dividend payments, we talk about interest payments. Ultimately, all of these results in payments or the movement of funds from one party to the next, which is where we see that there is really big benefits in the use of digital currencies, because you could use smart contracts to automate all of these processes. But if when it comes to the payments part, if there is a breakage in the sense that you are not able to do that natively, you still have to go through a traditional payments platform, then you will not be able to reap the full benefits of this integration. That's also why we see a lot of interest from the payments perspective, providing digital currencies such that use cases are able to make use of them. Now, the other big thing which we saw was really in terms of the broadening of asset classes. So rather than just say equities on national exchanges or perhaps bonds on certain exchanges, or which today is actually, most of it is actually not done on exchanges but over the counter, could we actually look at building private exchanges to take you know, to actually support such use cases? And that is really what we did in phase 5. If I could move to the next slide. So in phase 5 itself, after we have built this multi-currency settlement platform, what we did was really integration testing with variety of different use cases. We actually did it with trade finance, with insurance, different use cases. But I'll just focus on the private exchanges over here. So what we did was really providing that DVP functionalities to private exchanges. Now, if you think about how DVP today work, essentially your exchange. So the reason why we do DVP is to eliminate counterparty risk. You want to eliminate the risk between the buyers and the sellers, that one of them might actually not provide the securities or the payments after receiving the other side of the exchange. So what we do is we usually have a central party sit in the middle, usually the exchange, to take on this counterparty risk and essentially facilitate DVP settlement. But if you look at smaller exchanges, private exchanges, some of these exchanges are not considered trusted. So for them to actually sit in the middle to take on, to facilitate DVP, then you start getting questions about. So we shifted the risk away from the counterparties, but if you are shifting it to another intermediary, is that really helpful for overall financial stability, for example? So that's when we look at, could we then provide certain set of interfaces through the use of smart contracts to enable DVP settlement even with such private exchanges? So that's really what we did in phase 5 of Project Ubin. We provided basic escrow functionalities. So funds are actually held in escrow. And once the security settlement platform is able to prove that the security settlement has taken place, then the escrow will automatically release the funds to the seller. So projects like this actually makes it a lot easier for private exchanges to actually provide some of these features and then actually provide better services for their customers. Yeah, next slide. So that was what we did in phase 5. And actually phase 5, with phase 5, we actually saw that there were very strong commercialization potential for the network. We saw that through the use of the different use cases, we saw that there were actually an acute need for digital currencies that could be used by these different use cases. So following the conclusion of phase 4, actually two things have actually emerged. One is that we are moving beyond experimentation to commercialization. So in phase 5, in fact, we have actually already built the network to a very high level of production fidelity, but those were actually, it was not a live network. There were no real value being transacted. What is happening now is that the financial industry is actually now looking at developing this into a live commercial network. So this is currently being led by Temasek, DBS Bank, and JP Morgan. So what this will be is essentially a domestic in the sense that it will operate within Singapore, multi-currency settlement network that will transact on commercial bank money. So over here, it will not be CBDCs, but it will be liability of commercial banks. If you look at it, this is very similar to offshore currency, foreign currency clearing. So you will have one liquidity provider for US dollars, another liquidity provider for different foreign currencies. But within this network, you will be able to have live transactions in the different foreign currencies. So the other part of the work is really looking at how we can actually expand the work from a domestic perspective to an international perspective. So in phase 5 itself, we showed that it was possible for commercial banks to come together to cooperatively manage such a network. And this is in fact happening in the commercial setting today in Singapore. So what we want to look at next is, could then central banks behave in a similar manner? A few central banks coming together to cooperatively manage a multilateral platform or network. So essentially, this platform becomes an international platform. So within this network, there will be multiple CBDCs issued by different central banks that could be used for transactions by all the participating banks and their customers. The other thing we are looking at is really about interoperability and interconnectivity between CBDCs and CBDC platforms. There are many of such projects happening around the world today. Singapore is doing Project Ubin, there's Helvetia in Switzerland, there's a whole range of different of such projects. How do we ensure that all of these different CBDCs are able to talk to each other and transaction can be done seamlessly? And one of the last thing that we really want to look at is, can we move beyond a bilateral model to multilateral connectivity? If you look at many of the central banks projects today, we are always looking at bilateral connections. That is much easier to solve in terms of political challenges, in terms of operating model challenges. How can we actually build it into a multilateral network? What are some of the governance challenges we need to resolve? What are some of the policies, operating models challenges that we need to resolve? So that is really the set of work which we hope to bring the global financial industry together, bring multiple central banks together, work with other parties like the BIS Innovation Hub to really bring this on to the next level. Yeah. So I'll just stop here and then I suppose we can move on to the Q&A.
Thank you very much, Wiki. Absolutely fascinating conversation there. Thank you. Leanne, I believe we have one more polling question before we move to the questions. So here we are. So what do we see as the main challenges in the adoption of tokenized bonds? We've heard a lot about it today. Okay, so that's interesting. Main thing is regulatory or legal uncertainty. Very good. Thank you very much for voting, everybody. Let's move on to the questions. We have a lot of questions. I know that in the time left, we won't get through most of these, but we will try to answer them or send them off so they get answered bilaterally. But let's just look at one or two of these questions. There's one here, which I think is it's really for Wiki, but I think it's for all the speakers. What digital ID solutions are you going to use for participants? Wiki, would you like to start on that and then perhaps move to Tim?
Yeah, sure. So specific to what we are doing, we actually focus on the settlement, really on the movement of the financial asset. We have not looked so much on the digital ID side. But what I would say is that there are already a lot of work today by different organizations on could we have a much better way of exchanging customer information? Could we have national digital identity that could be shared more seamlessly between different countries for transactions that could make it a lot easier for, as trusted sources of data. But of course, there's always the other aspect, which is in terms of data privacy. So there are actually quite some work today on this area. Yeah.
Would anybody else like to comment on that?
Sure, and I think the right way to approach this is, we at SIX are looking to minimize the disruptive steps as we go through these transitions. So day one, we actually don't need any sort of different digital ID. We'll be using the same communication mechanisms between the institutional players and SDX that we actually use with the traditional infrastructure. So it makes it super easy. I would imagine in time we would have some form of new identifier, but while we're operating in the current paradigm, we don't really need one. So it allows us to just keep going as we have been.
Okay, thank you. The last question that we posed highlighted regulation. We have a question here on regulation, and it's a very basic question, but I think it's interesting. What does regulation for smart contracts for securities look like? Does anybody want to take a look at that?
I can have a stab. So I find the discussions around smart contracts to be quite interesting. I think there's a lot of potential misunderstanding of kind of how smart contracts fit into it. They really are just a piece of code at the end of the day. So the technology will be managed around security and trust and reliability in the same way that it always has been, as technology is. And for instance, when we work with FINMA for our licenses, the same stringent rules apply in terms of the expectation of our ability to deliver secure, robust, scalable infrastructure that's resilient. The smart contract element is really just a piece of that same infrastructure and doesn't really require sort of additional regulation. Now, I think that it bridges nicely to the conversation about standards, which is maybe perhaps more relevant here, which is if everybody builds different systems, and they will, we can't ever expect everyone to build on the same system. That wouldn't work. We're going to need to see interoperability, and we're going to need to see some level of standardization around smart contracts. So one example of that, and there are many, one example of that is the Interwork Alliance, which we're a part of, which is looking to generate those kinds of standards. So I don't think technology, and perhaps is something that Wiki can comment on, technology isn't something that's necessarily regulated, right? I think that's the key. It's the capability that's regulated, and you do have to do it in a way that's secure. But the idea of regulating smart contracts doesn't quite make sense, I don't think.
Mm-hmm.
Yeah. So the regulations are usually are always looking at the underlying business activity. So the smart contract is really just a set of programming codes that enable these business activities to be undertaken. So like what Tim was saying, regulation is really on the business activity, not so much on the smart contracts itself.
Thank you. There's one here which I want to address to Morton, if I may, given your role at the BIS Innovation Hub of sort of helping coordinate some of these innovations and initiatives globally. And it says various protocols are being considered for CBDC implementation in different countries. How do you address the interoperability challenge? And if I may, just to add on to that question, we're seeing so many different initiatives all over the world, from the ones we've heard about today, but there are many, many others, and everybody's sort of running along sort of parallel tracks. How do you see the exchange of information so people aren't reinventing the wheel all the time?
So that's an excellent question. I think hopefully, it's a big hope, but hopefully we've learned the lessons of the past, where we built things in vacuum and then figured out that there was cross-border and interoperability issues that we needed to figure out afterwards. And so, but of course, the CBDCs are likely to be developed first in a domestic context, so they will come with some, domestic input into them. But I think the hope is, and the BIS Innovation Hub hopes to play a big role in this, is that we're starting with this new technology, and already now, even before things are really going live, people are already considering interoperability. There's some interesting work going out both in the Swiss center, but also in Hong Kong and Singapore, around how do you actually connect these things. So I think the idea that interoperability is already being considered now, I think, leaves some hope that we won't end in the mess that we have seen in other endeavors.
And could you comment a bit on the level of international cooperation?
So first of all, there's a lot of working groups going on, both in the CPMI context, FSB, but also there's a small group of central bank where Benoit Curé and John Conliffe are working, trying to set up some kind of common framework for central banks to think about when they issue CBDCs. And this is relevant both for retail CBDC and, as we're discussing today, wholesale CBDC. And then within the Innovation Hub, we're really tasked to come up with solutions to some of these interoperability issues.
Okay, thank you very much. Anybody else want to comment on that? If not,
I just want to add that international collaboration is really happening today. So if you look at the joint projects by central banks, there are just so many of these joint projects, collaboration between different central banks. And I do see that, as long as we are all working together, we are sharing our work with each other, we are moving in a common direction. While that doesn't mean that we will be able to arrive at standards overnight, but at least we are all converging rather than diverging. I think the worst scenario which we could have is that everyone is moving off in different directions. Then at a certain time, when we see that there is a need for interoperability and connectivity, it will be very difficult to ship all of this work together. But because today we are all already talking to each other, everyone is working in a common direction, that makes it a lot easier for standards to be arrived at when there is a strong need to.
Yeah. I mean, that leads on to a couple of other questions from some of the, or from one of the attendees here. which is really also looking at the harmonization of legislation and regulation, which is going to be needed to have widespread adoption of this new technology in the real world. Are you working with, are you trying to promote this? I guess this might be a question also for you, Morton, from the BIS.
Yeah, but I think, yes, I think that's the natural role for the BIS to come up with the common standards, and that work is ongoing or starting to be start up. So I think it's going to be, for example, in the CPMI sphere of things, and so, but it's still, you know, there's nothing out there yet, but work is definitely going on.
Very good. Well, look, we could go on for a lot more time, but I can see that people are having to drop off, and we've slightly overrun our time. So I think we're going to have to leave it there. It's an incredibly exciting time, the very, very exciting developments. We're seeing that we're moving into a live period with moving into commercialization of some of these interesting bits of innovation. Also, the internationalization of these initiatives is going to be absolutely critical over the next few years. So I'd like to thank very, very much Tim. I'd like to thank Morton. I'd like to thank Wiki for sharing your initiatives with us, and wish you the very best of luck as you progress into the next stage. And we'd very much like to have you back in, I don't know, in a year perhaps, to give a progress report on some of these extremely important developments that you're spearheading. So with that, thank you very much to our three speakers. Thank you all for the questions as well. I'm sorry we haven't had opportunity to answer them all. And thank you all very much for your participation today.